Prime Minister Datuk Sri Anwar Ibrahim says he will table a revised budget 2023 in February next year. Anwar said this as he tabled a temporary budget, a 107.7 billion ringgit expenditure allocation to ensure the functioning of government services for the first half of 2023. The allocation, which was passed by the Dewan Rakyat, is meant for the payment of civil servants' salaries, utilities, scholarships, welfare aid, education and health services, as well as ongoing development projects. For next year's federal spending framework, Anwar, who also holds the Ministry of Finance portfolio, said Putrajaya will take a more targeted approach to protect the rakyat and small businesses while reducing leakages that will benefit the ultra-rich and profitable giant companies. He said social protections will also be strengthened to safeguard the vulnerable, including gig workers. Measures will also be introduced to encourage high-value private investment towards generating quality employment opportunities, provide incentives for core sectors, and enhance the renewal of public delivery services to facilitate business and fight red tape. Anwar added that public spending will be adjusted to ensure inclusive development, especially to shrink the gap between urban areas and rural areas, as well as between states such as Sabah and Sarawak. He also spoke of a reform of the civil service and the strengthening of national security. The Transport Ministry will review 5 development projects with a total contract value of almost 650 million ringgit so that they can be implemented via open or restricted tender. Transport Minister Anthony Loke Siew Fook said in a statement, these projects had been approved for procurement via direct negotiation, but the letters of acceptance had not been issued yet. The projects include stabilisation and slope reprofile works along the Pahang Railway tracks, Mentakap Merapoh, and Kelantan Railway tracks, Gua Musang Tumpat. Also affected are the appointments of independent checking consultants for Phase 2 of the Klang Valley Double Tracking Upgrading Project (KVDT) and works on the Gua Musang Tumpat and Kemas Mentakap tracks. Lok's announcement follows Putrajaya's order to halt 7 billion ringgit in flood mitigation initiatives approved by the previous government because some projects were directly awarded without tender. This could spell the possibility of more mega projects coming under review, including the Mass Rapid Transit 3. A research house believes Malaysia's economy will still expand next year, even if the world fails to dodge a recession. According to TA Securities researchers' projections, in the worst-case scenario, Malaysia's real GDP could grow between 2% and 3% in 2023, should the global economy see a dramatic slowdown and domestic demand plunge. In its annual Strategy 2023 report, TA Securities said, as an open economy, Malaysia is vulnerable to any global crisis that could affect growth and trade. It expects the unemployment rate to ease slightly to 3.5% to 3.7% in 2023, from an estimated 3.8% to 4% in 2022. While both internal and external risks persist, TA Securities said the country's broad-based and diversified economy should help support and cushion the impacts of weaker exports. It sees real GDP growing moderately by 4.5% next year, compared with the projected 7.5% growth in 2022. On the local currency, the research house tweaked its 2022 average ringgit forecast slightly to 4.4 against the US dollar from 4.43 previously. This following the less aggressive approach by the US Federal Reserve in its December meeting and the appointment of Datuk Sri Anwar Ibrahim as PM. By the end of next year, it expects the ringgit to close at 4.2 to 4.25 to the greenback and average at 4.35. For 2024, it says the currency should improve further to close at 4.1 to 4.15 to the US dollar with an average of 4.25. Scomi Group says its proposed scheme of arrangement with its creditors has received the High Court's approval. It said in a burst filing that the proposed scheme was approved at the hearing yesterday and is now binding on the company and the scheme creditors. This after the majority of its creditors voted in favour of the said scheme at a court-convened meeting on November 15th. To recap, the High Court had in September granted leave to the company to call for the court-convened meeting in relation to the proposed scheme of arrangement and compromise between the company and its creditors. Scomi fell into PN17 status in December 2019 after its shareholders' equity spread slipped below 25% of its issued share capital and its equity dropped below 40 million ringgit. The company has asked Bursa Securities for a further extension of time of 6 months up to May 31st, 2023 to submit its regularization plan. Pokong Holdings saw its first quarter FY 2023 net profit jump almost 3 times year-on-year, driven by rising demand for gold jewellery and investment products amid a rebound of the economy. Net profit for the quarter soared to 15.67 million ringgit, while revenue more than doubled to 370.36 million ringgit. No dividend was declared. Pokong explained that its business was affected by a nationwide lockdown last year and that it leveraged on the rebound in demand as economic activities resumed. However, compared with the immediate preceding period, the group's quarterly net profit dropped 47% from 29.84 million ringgit, as revenue eased 11% from 414.66 million ringgit. Going forward, Pokong said it has put in place adequate measures to meet the challenges of FY23. Pokong shares closed unchanged at 79 cent, giving it a market capitalization of 324.18 million ringgit.